Hello, everyone, and welcome to our panel today, Reverse Mortgages and Forward Savings, hosted by the Canadian Lenders Association and sponsored by Portfolio Plus. We have a wonderful group of panelists today and a really great discussion moderated by Sue Bartlett, the Senior Sales Account Manager at Portfolio Plus. Sue's going to take us through a panel discussion, and then we'll be accepting questions live. So please feel free to submit your questions at any time throughout the discussion, and hopefully we'll be able to get to them towards the end. And as always, this panel is being recorded and will be distributed to everyone after the session. So without further ado, I'll pass the virtual microphone over to Sue to get the panel started. Off to you, Sue.
Thanks, Dean. Good afternoon, everyone. As Dean mentioned, my name is Sue Bartlett, Senior Sales Account Manager here at Portfolio Plus, and so pleased to be your moderator today. So now, just to clear up any confusion, some of you might have been expecting to see my wonderful colleague, Pat Casulo, today, as he was originally scheduled to be the moderator. Unfortunately, Pat felt quite ill last night, caught one of those mini bugs that are going around, and worse this morning. So we had to convince him to rest today and allow me to substitute and fill in for him. Saying that, I am very happy to be here today and looking forward to hearing from our experts. For those of you who may not be familiar with Portfolio Plus, we are an API-driven core banking software provider. And actually, the idea of this webinar came from our recently released ebook entitled The Alternative Retirement Plan. So this ebook explores the increasing importance of considering home equity and reverse mortgages in your retirement planning. So while our discussions today are going to begin looking at retirement planning and the challenges that we're facing in an inflationary, volatile economic environment, we'll really be focusing in on home equity and the rising value of homes in Canada and how Canadians can unlock that equity and to keep up with both the cost of living and potentially leverage it for investments in their future. So ultimately, the experts, our panelists, and myself hope that this webinar will uncover some new strategies and at least encourage you to think differently about home equity as we discuss products today that include reverse mortgage, home equity lines of credit or HELOCs, and other investment products. So as Dean mentioned, if you want to take advantage of the questions option on your screen, certainly do that, and we'll address some of those questions at the end. So I actually have the pleasure of introducing our expert panelists today. So with me, I have Jackie Weham, VP of Growth Businesses, Personal Banking and Lending at Equitable Bank. I have Wayne Kainu, Head of Mortgages at NEO, and Clive Koch, Regional Vice President at Home Equity Bank. So welcome to each of you, and thank you so much for giving us your time today and being here.
Thank you.
Thanks for having us.
So let's go ahead and jump into our discussions. So as a first topic, when we're looking at the current economic situation, we're faced currently with record high inflation, unpredictable markets, and declining investment portfolios. We now have increased uncertainty for Canadians and their ability to reach their retirement goals. The Globe and Mail reported in February that 52% of Canadians say that by the end of the month now, they have nothing left to contribute to their retirement plans. Another statistic is that 36% of those between the ages of 18 and 54 believe that they may never be able to stop working. So my first questions for the panelists are really based around, what are your initial thoughts on those statistics? Is there anything about those stats that signal that perhaps the end of traditional retirement planning is here? And I'm wondering how lenders can help Canadians plan for retirement with this understanding in mind, that things are changing and that perhaps, as we know, it's probably just not as easy as it was to plan for retirement. Perhaps, Wayne, did you want to start with that one?
Yeah, sure. Absolutely. Absolutely. You know, you think about, there is a lot of pain out there right now. Obviously, there's been a aggressive growth in the in interest rates over the last 18 months. And of course, credit card debt is an all-time high, right? So you're taking a look at the way that traditionally people look at retirement, just with the investment vehicles like RSPs and TFSAs. It's just not working, or it's not good enough for a majority of Canadians. So certainly, I've always been a big supporter and advocate of using a home, or at least strategically having your home as part of the financial plan, because it does open up a lot of doors that most Canadians don't even know exist.
Great. Okay. Clive, how about yourself? Did you want to add to that?
Yeah, I think that this is actually a great question. There's some things that we actually know about Canadians. We're living longer. That's probably the single biggest thing, and we're sort of outliving the savings that we have set aside. So we're living longer, we're spending more, and we're saving less. And I think that when you combine that with the fact that 47% of Canadians are retiring without a defined pension from their employer, you could see how this could potentially grow to become more of an issue. So I think that the biggest word that I could probably use is the word permission, that gives people the permission to feel comfortable to use their equity. And I hope that as we go through today's session, that gets uncovered a little bit more.
Oh, I love that. Yeah, permission. That's a great word for it. Okay, so adding to the current economic situation, we have monetary policy decisions being made, central bank rate hikes, and lingering effects of the pandemic all weighing very heavily on household income. And we have this dramatic increase as we're all experiencing in the cost of living. So it's also clear now that homes make up a considerable portion of our personal wealth. Just this last May, the Canadian Real Estate Association reported that the average home in Canada was selling for $716,000. And that was up $100,000 from just 5 months previous in January. So that's, a pretty significant increase. And this is all despite, of course, rising mortgage rates. We also know that in Toronto and Vancouver, at the same time, the average price of a house was $1.1 to $1.2 million. So my questions on this aspect are with, as you said, Clive, many of the individuals approaching retirement, I think you said 47%, they may be finding themselves house rich, but cash poor. How should Canadians now be thinking about home equity, and how important is home equity as they get closer and closer to approaching their retirement or hopeful retirement date? Jackie, did you want to start with that one?
Sure, Stu. I think a lot of the stats that you and Wayne and Clive threw out there are super interesting. I think I would layer on a couple more just to reinforce the point and add additional color. When we poll Canadians, 90% of them say that they're going to rely on CPP and OAS to fund their retirement. And a third of those say that they're going to rely on those sources heavily. So it just reinforces that idea that many Canadians are entering their retirement years with very little savings. Then when you combine that with the reality that OAS and CPP annual payments on average are only $17,000, compared to the average cost of living, that really exasperates the gap that is the reality for many Canadians. And so going back to your question, I think that absolutely Canadians need to broaden that scope of what they think about as part of that retirement plan. I think traditionally there's been what I would think of as a three-legged approach, right? You've got your personal savings, your pension, but as Clive mentioned, many people don't get to benefit from those traditional employer pensions anymore. And then you've got social welfare. But again, we just talked about some of the gaps on the social welfare side of things. So they really need to consider all of the assets in their available toolkit. And when you look at what are those assets, 40% of seniors' wealth is tied up in real estate. Put another way, when you look at the 65 plus population in Canada, it's $8 trillion of real estate wealth that's tied up. And traditionally, I think that many people have thought that the only way to access that wealth was by liquidating, to sell your home, to downsize. And I think what the reverse mortgage product offers is the ability for people to tap into that wealth while staying in their home, which we know that overwhelmingly Canadians want to do, and allows them to participate in any appreciation upside. So just going back to that notion of, home prices continuing to move directionally upwards, this allows participation. So I think it's pretty important that we shift that mindset.
Absolutely. So clearly, home equity is now a key element to be taken into consideration, right? Everyone should be thinking about that if, in fact, they are homeowners. So great message. Okay, so in terms of, we kind of touched on it there, the ideal candidate for reverse mortgages. I'm thinking back 10 to 15 years ago, and I believe it would have been described as a little bit more of a niche consumer. Home prices were certainly not what they are today. And now that home ownership and the equity in our homes is a substantial portion of our personal wealth, as home prices continue at astronomical levels, I imagine, I think I'm hearing that there's a shift in the value of some of these financial solutions appealing to different types of consumers in the market. So the ideal reverse customer could now be more of a more traditional needs-based consumer. But I suspect that there's more to that than just, it's shifting to a traditional based, needs-based individual. So the idea of the ideal reverse mortgage and the ideal consumer, has it changed over the last few years? And how has it changed? And if you could you comment on where you see that persona or that consumer in the next 10 to 15 years as well? Clive, maybe did you want to tackle that one?
Sure. I would say that the product itself has expanded exponentially over the years. When you look traditionally what reverse mortgages look like, it specifically served the need of helping consumers clear their debt, increase their cash flow, and as you mentioned earlier, Sue, it allows them, and Jackie had mentioned, allows them to stay in their home and reap the benefits of that. What we've noticed that over time is, as consumers have been starting to get more educated and their knowledge increases around how powerful a reverse mortgage can be and how they can use it, we've also seen how the purpose of the funds that they use a reverse mortgage for has changed. And so we're seeing the mindset of a consumer shift from being more of a needs-based scenario where I need to clear my debt or need to set myself up if my roof leaks or my car breaks down, more to an individual that's saying, I want to. And so I want to go golfing more. I want to eat more steak. I want to travel more, whatever that might be. And so we're seeing a shift in the mindset of consumers as knowledge improves. We're also seeing a shift in the product offering that's given with reverse mortgages to consumers. Initially, we had a lump sum product that we saw in the marketplace, and now we have a product that can pay out funds as a specific annuity or even reverse mortgages that are open. So there's been a lot of involvement. I believe that there continue to be more involvement, and I think it's a great opportunity. In terms to what it will look like in 10 or 15 years, it's tough to say, but I will say that the pie will be definitely bigger than it is today. And when we look at other markets like in the UK or Australia, who are ahead of us in reverse mortgages, that's an early indication as to what the size of the opportunity is for all of us.
Right.
Dude, could I just add one thing in there? Like,
Sure.
I completely agree with everything Clive said. The one only addition I would throw in is that when you asked the question, I think you kept on saying, what is the ideal customer? And I think that on that, to me, I don't actually think there is necessarily an ideal customer. The customers can be needs-based, but they can also be a bit more affluent. I think that this is like a solution that can serve the needs of many types of customers, and they can look and feel very different. So I think to try to pigeonhole and say there's an ideal customer, I think that It's broader than that.
Sure.
And if I can add something as well, like I also think it's not a product for everybody, right? You know, and I think that's important to note as well. It's something that could help people, but it also could hurt people as well. So I think that's an important piece of the puzzle.
You know, what I took away from each of your comments was the opportunity for choice. I think what it's really bringing to the table is some additional choices and, you know, putting that power into the consumer. And, you know, Clive, I think you touched on, what do I want my retirement to look like? And Jackie saying that 90% are relying on, you know, support and how low that payment is. I think looking at the home equity really adjusts that ability to make those choices and make those plans for the quality of life that you'd like during your retirement. So very interesting. Thank you for that. Okay, so we spoke about the consumer lens there for reverse mortgages specifically. Let's kind of look on the flip side and look at how important reverse mortgages are for lenders. So putting on the lender's perspective, are reverse mortgages, or the reverse mortgage product, something that every lender, alternative lenders, all types of lenders should be offering to their different clients as the value of homes increase and the cost of living continues to rise? Specifically for lenders, what are some of the benefits that they would see by offering reverse mortgages? And conversely, are there any challenges associated with offering this product? Jackie, did you want to maybe try that one?
Yeah, of course. So I would say that for lenders, one of the key benefits is it's another product to add to your product suite. So allows you to be in front of your clients or your broker partners more frequently. And for us in particular, it allows us to be a one-stop shop for our broker partners. So I think there's absolute benefit for us in offering the product. The other benefit is that it is a purpose-built credit solution for this segment of the market. And you don't find a lot of products that are built specifically for the 55 plus population. And in that age bracket, I think that a lot of consumers are surprised to find that when they go out to try to get traditional products, they may not qualify. And so there's a clear gap in the market. And I think that as a lender, we're able to fill that gap and need. In terms of challenges, I think that there's a whole slew of them. When you are offering a product that is, you called it niche, which I think is true, relatively new to many, the ecosystem, whether that's brokers, financial planners, accountants, lawyers, family members, will be unfamiliar with that process or the nuances of that process, and therefore there may be a perception that it's more complex. And so as a lender, your role is enhanced and there's more work to get a client or a broker from the sales process to the qualification, through to adjudication, through to ILA, through to funding. And so there's more work involved. And so that is obviously a challenge and an investment that needs to be made. I think another key challenge is just the consumer mindset. So if you think about my parents' generation or my grandparents' generation, and to an extent my own generation, everyone's been taught this idea that you pay down your mortgage and it's a big priority and the whole goal is to own property and your home. And then to go back and say, well, actually it's okay to borrow against your home now. It's a big mental hurdle. And I think that there's a reality that we need to get clients and brokers alike across that hurdle. I would also say that there's a big elephant in the room that we should probably address, which is that there is stigma associated with the product. I think a lot of that is halo effect from other markets, whether it's the US many years ago, where there may have been different product constructs that didn't make sense. We still live in a reality where we have a lot of misunderstanding about how the product works. And even our broker partners or our financial planning partners may have those same misperceptions. And so that obviously makes it a challenge pushing the product forward.
Right. You know, Jackie, it's funny. I'm so glad you brought up the part of the stigma, because that was going to be a follow-up question I had there. I don't know if yourself or perhaps Clive, you could speak to how your team members, how your brokers, how do they pass through those barriers? I'm hearing education and information to clients, but how do you get past those barriers to reduce that stigma and really talk about the realities of the value of this product?
Yeah,
Yeah.
I can answer that one. So, as Jackie said, it really is about education. And Wayne had made a statement earlier, that the product can also hurt you, and there's a perception that it can hurt you. What I want to make sure that most Canadians and everyone on this call understands is that, the mortgage lenders that provide reverse mortgages have a no negative equity guarantee clause in their actual commitments. And that protects Canadians and it protects the estate of Canadians. And if there's one thing that I would want everyone on this call to come away with understanding, it's that piece. I think Jackie touched on a lot of key pieces in terms of what the challenges are in being a lender in a reverse mortgage space. We had heard the number earlier of $8 trillion in terms of real estate. The number of available equity is 1 trillion. And this is, so when we look at Canadians who are 65 years and above, the actual available equity is 1 trillion. That's still a massive, massive number, no matter any way you look at it. I think that the challenge that lenders have is simply the fact that the size of the pie is not as large as traditional lending, where a customer wants to come in, purchase a home as a first-time buyer. They want to simply do a refinance or get a line of credit. So there's a lot of credit options available for consumers. And I think that Wayne hit the nail right on the head. This is not something that's available for everyone, but I can say that what does count as to whether or not it's available is timing. There are many customers that we deal with that we say to them, stay in a line of credit right now, and then you can move into a reverse mortgage later on when you're in retirement, as an example, and your income may have dropped off. So just want to add those points.
Clive, could I just have you elaborate a little bit on, you said the zero equity guarantee. Could you just elaborate a little bit on that?
Yeah, so both myself and Jackie would confirm that when a consumer takes a mortgage with us, as long as they sell their property at fair market value, we cover the actual, we make certain that the estate is not put in a negative position.
Okay.
Right, and that's the main thing. And so what anyone should do is they should speak with their financial planner, their mortgage broker, their banker. All of these are sources that can connect them to either of any of us to get information around this.
Right. Okay. Again, tied to that stigma piece where, years ago you would hear different things of, you don't want to have your kids, holding on to or having any additional expenses, so on and so forth. So I'm really glad that you pointed that out. All right, so we know that we have two main financial institutions providing reverse mortgages in Canada. So Home Equity Bank and Equitable Bank. Both banks have reported significant surges in reverse mortgages, specifically since the pandemic. So not new statistics probably for Jackie or Clive, but according to the Financial Post from last May, Home Equity Bank reported just over $1 billion in reverse mortgage originations for 2021, which represented a 28% increase from 2020. And Equitable Bank reported a 262% year-over-year surge in reverse mortgage, their reverse mortgage product in the first quarter of 2022. So it's abundantly clear there is a demand for these products and an increasing demand, particularly now after the pandemic, and as we've discussed, as many Canadians are choosing to age in place and stay in their homes longer. So my question for the panelists are, two banks, why aren't more banks offering reverse mortgages then? And what do you foresee for the near future? Are we going to see additional banks and financial institutions coming out with reverse mortgage products? Who would like to tackle this one? Maybe Clive, did you want to go first?
Sure. I think it's a really great question in terms of other banks and other financial institutions. You know, sometimes we think of the word bank and we think that they're the only folks that can lend, but insurance companies can also lend too. And when you look at the reverse mortgage as the framework as to in terms of how it's built, it's more closely built like an insurance product than it is a mortgage. Because the nuts and bolts of the product are based around actuaries in terms of a lifespan of individuals. So it's a very different than a traditional mortgage. You know, and Sue, I would say that the reason why I think not many institutions have launched it yet is because it is so complex in terms of its framework. You have to wait to receive your money back because there are no payments made, right? And so that's a big change in structure and framework of how a mortgage can look like. Another key difference is the fact that servicing this type of customer is very different. How you handle renewals, how you service the customer from a phone call that you receive. We have different metrics that we would use to service a customer who's 55 years and better than the metrics that you would use to service a customer who's 35 years old. And so I think that it's such a big departure from what we're used to. And this is why I would say that many lenders have not jumped in right away. The last point that I would say is we've been involved in reverse mortgages for about 38 years now. And the data that we have around reverse mortgages is incredible in terms of what's the right solution for the right customer in the right market. And it's difficult to be able to get to that without having a history of lending.
Great. Gosh, I love that idea about the consumer and understanding how to work with and provide service for that specific type of consumer, 55 plus, right? Jackie, please go ahead.
Sorry, so I think that all of that makes a ton of sense. I think the other point that I would call out is I would bet for other lenders that the relative size of the prize is fairly small, potentially, versus other opportunities that they may be looking at. So the overall market is still pretty nascent to a certain extent, and therefore it may be less attractive for them at first blush. I think that if we just go back to the thing we talked about earlier, the stigma, I do think that that also poses a challenge with the myths and misunderstandings about the product itself. It means that, and both you and Clive mentioned it before, that there needs to be an investment in education, and therefore there's cost associated with that. And it also means that it's not a market that necessarily is going to grow overnight, but those investments need to take time to pay off. So I think there needs to be patient capital for those that are investing in the space. I think that with all of that said, when we do think about the macro factors, it is overwhelmingly obvious that overall debt is rising, that the cost of living is increasing, that people want to stay in their homes. So all of those things are going to still continue to prevail and drive demand for the product. And I think that with investments that Home Equity Bank and ourselves are making in educating the market, that's going to drive better awareness, better adoption. And I do think that that will attract new lenders into the space, which ultimately will drive innovation and is better for all consumers. So I think ultimately, though there are some challenges that, people are going to enter the space, and I think it'll be good for the overall market.
Right.
Yeah, if I can just add to that as well, I think that if you take a look at, obviously the demand is there for this type of product. On the need side, if we have a client that's looking at paying down debt, for example, and they're retired, they just simply won't qualify for anything else. I mean, its qualifying rate again is 9.7% for a home equity line of credit today. So they really, if there's a need for it, this is really the only option for a lot of clients. And so that's the first piece. I think the other thing to remember, it wasn't many years ago that, home equity was the only product that or company is offering a reverse mortgage. Today, there's a couple companies, and you start to see a few new ones like Bloom, and then there's different types of structures that over the last few years, like Fraction and a few others, that are a little bit different, but very comparable at the same time.
Right. Agreed. Okay. Thank you. Wayne, my next question is a little bit more focused for yourself, but certainly Clive and Jackie, would love to hear your thoughts as well. So a reverse mortgage, of course, is one way to access the equity in your home. But as we've called out, it's not an option for anyone under 55. So with the rising cost of living, the younger demographic we know is finding it harder to save for retirement, particularly challenging for this group. And as we mentioned previously, the Financial Post said that 36% of Canadians between 18 and 54 actually believe that they may not be able to fully retire or quit working. So another way Canadians can access equity in their home is through a home equity line of credit, or HELOC. And just to clarify, a HELOC offers borrowers a revolving line of credit that's combined with that is often combined with the borrower's mortgage, where funds can be withdrawn at any time. So interestingly though, young homeowners generally don't think of real estate as an investment, though it's often a significant part of their overall wealth. So with all that being said, here are my questions. For this demographic, really, how important is home equity for them? And for those who perhaps have just purchased a home or have only owned a home for a few years, should they even be thinking about a reverse mortgage or a home equity line of credit? Should they be thinking about a reverse mortgage for retirement planning purposes? And should young generations be leveraging home equity to invest in their future or future retirement? If so, any of those options, what are some of the potential investments available for those under 55 and perhaps having access, Wayne, to a HELOC? Did you want to tackle that?
Yeah, hey, absolutely. So, just to answer a couple of those questions. First of all, what Jackie said earlier, there's that old school mentality to pay off your mortgage as quickly as you possibly can. And
yeah.
Right, and in the meantime, these families are acquiring a lot of unsecured debts. And so they're, the average Canadian sitting with over $21,000 of unsecured debt right now. And if you're just making the minimum payment, 3% repayment on that, that'll take 25 years to pay off. So it is a little bit scary in terms of where, the average Canadian sits today. I think that, a combination of a few things, even though, like Clive was saying, that, Canadians are becoming more educated when it comes to their finances. However, I still think, we can all agree that the financial literacy is still very lacking in the country. And so I think, when you take a look at what these younger demographic, again, trying to figure, okay, I want to be able to retire at this age, and right now I'm not putting anything away, for example. They have no choice but to really look at that equity. A reverse mortgage really isn't an option. Like Clive said, it's a timing thing for a lot of people and a lot of families. So it's not an option today. There might be other options and new structures that might come in place over the next few years. But in the meantime, taking a look at that equity in terms of, we had a family who purchased maybe 5-6 years ago in Ontario. They've seen an incredible increase in, like you said, the value of the property, but they're sitting with a ton of unsecured debt. So instead of, living paycheck to paycheck, getting a line of credit, HELOC, we can free up a lot of cash flow. I mean, just a simple refinance, really a debt restructuring or an equity repositioning, it allows the freed up cash flow. And in many cases, it's $2,000-3,000 a month, and now they can start to save for the for their retirement. So those are options that I think that, you know, people should be looking at down the road for sure. I think that as they continue, you know, to leverage the equity and build the equity, that's something that's going to naturally happen. It's for saving as they pay down their home. But I still believe very strongly that the opportunity to, pay off as much debt as you possibly can, forget that cash flow, and use that difference to build your wealth. I think that's the smartest thing that the younger demographic can be doing today.
Yeah, great. Thank you. Jackie or Clive, did you want to add to that?
Did you want to make a statement, Jackie?
No, I think that Wayne said it well.
Yeah, I think that, Wayne, what you said is on point, definitely. And I think that there's an opportunity here for consumers to simply understand the difference between simple interest and compound interest. And there's a lot of benefits that actually exist for those who are in this space when it comes to lines of credits in terms of how it affects you overall. But I think that cash flow, as Wayne mentioned, is the single biggest thing in understanding that this solution gives you.
Clive, you said it a lot more eloquently than I was going to say, because a piece that I heard from Wayne there was, you know, access to smart debt, or putting your debt into something that frees up that cash flow, makes more sense, you know, certainly gets you ahead. Instead of paying that 3% on that 21 forever and ever and ever on that 21,000. So yeah, those are some really great points. So before we're kind of getting to our wrap up, I noticed that there are some questions in the Q&A. So Dean, I'm not sure, will you be looking through the questions, or shall I take a quick look and pose some of them to our experts?
Sue, I'll let you go ahead and take a look at the Q&A section, and you can pose the questions to the panelists. Perfect.
Okay. So our first question is a question from Neo. Is Neo a lender or a broker?
That's a very good question. You know, so currently, you know, we are going through a transition right now. Obviously, it's something that right now we operate as a brokerage, and so we have, you know, quite a few options for clients and leveraging the lending partners that we currently have today. So. But our roadmap, certainly we do want to continue to operate as lender in the near future.
Excellent, thank you. All right, we have another question. The question is, does regulatory compliance play a role in some institutions not entering the reverse mortgage space? I wonder who might want to tackle that one. I can repeat the question. Does regulatory compliance play a role in some institutions being hesitant or not entering the reverse mortgage space?
Jackie, did you want to go ahead, or?
I don't actually know if I know the answer to that. I mean, I would hazard that it wouldn't, but Clive, I would welcome your thoughts on that.
Well, I would say that we are OSFI regulated, which is the body that oversees financial institutions. And so there's guidelines that we do have to abide by. I don't know if I would say that it's a hindrance into someone coming into the space, but there are things that anyone who's lending money into space would need to fulfill in order to call the product that they're offering an actual reverse mortgage.
If you were to compare it to regulatory and compliance, different measures that you have to do for a regular lender, would you say that they're somewhat equally balanced, to your knowledge, for a traditional mortgage and a reverse mortgage?
Yeah, you know, we can let Neo answer that, and Wayne can probably answer that from a Neo perspective around disclosure and what's required to be shared with the customer. From our perspective, we have disclosure documents that satisfy compliance for anyone who decides to embark on the journey of taking a reverse mortgage. If you go down the road of taking a HELOC or a traditional mortgage, you would have disclosure documents and compliance also. I don't know, Wayne, if you had a point you want to share on that.
Yeah, you know, it really comes down to, you know, especially these types of products, if it's a reverse mortgage or home equity line of credit, you know, I feel that you do need some guidance with these types of products. I mean, like that's important, whether it's coming from us, maybe it's a financial advisor that that the client is using or should be using, and I think that's important when it comes to compliance side of things. We're regulated by the all the provincial regulators on the broker side. So there's really no additional disclosures that's not anything different than we would be offering on a regular mortgage.
Okay, that's good to know. Thank you. I'm going to compliment the audience member. These are some great questions. I've got quite a few now. Next question says, can you talk about the maximum loan to value based on the age of the borrower rather than their life expectancy? So can you talk about the minimum loan to value based on the age of the borrower rather than their life expectancy?
Sorry, and Sue, you said, first time you said maximum loan to value, right?
Yes, the maximum
loan to value.
Yes.
Yeah. I mean, the maximum loan to value that we offer, and I'm almost positive it's in line with Home Equity Bank, is 59% loan to value. And that changes or scales with age. So at lower age brackets, you would have a lower LTV available, and at higher age brackets, you'd have a higher LTV. So I think that was the question, yeah?
Yes.
Yeah. Okay.
Great, thank you. Next question was, what are the underwriting requirements, example, credit rating for the reverse mortgage product?
I could take that one. So the underwriting requirements, there's a couple of things that we look for in the borrower. We do, like any other lender, pull their credit bureau to test their credit. But their credit does not limit them from access to the product. And I think that's probably one of the biggest selling features. Canadians as a whole have actually excellent credit in terms of how we pay back our credit, especially in the demographic of Canadians 55 plus. They manage their credit even stronger than the average Canadian. Now, what I would say is that we look at their credit, we look at their income, we look at their ability to service their property taxes, their home insurance. The whole purpose of a reverse mortgage, it's a product that's supposed to be made and set the consumer up for lifetime. So we're not looking for scenarios where it's a temporary solution where we're putting a Band-Aid on a problem and that problem is going to continue to exist. So for details on this, I would say reach out to myself, reach out to Jackie. We can definitely put you in contact with the right people and look at the scenario that you have in front of you. But the main things to know is we do look at income to cover off the property taxes and home insurance. If it's a condo, the condo fees. And outside of that, we do look at their overall credit.
Great, thank you. Next question is, if the market or audience for reverse mortgage is still rather small, what was the catalyst for EQ Bank entering this space as a somewhat newer entrant?
Yeah, so I think for us, we view ourselves as a challenger bank. We view ourselves as a bank that looks at opportunities, looks at markets, and tries to come in with something differentiated. And so when we looked at this market in particular, we thought that there was a real market need. We thought that there was a gap, and at the time there was really one player in the market, and we thought that we could come in and offer something differentiated. Our whole value proposition is being really hyper focused on giving customers the best service, but also the lowest rates. And that is how we differentiate ourselves in the market.
Great, thank you. Next question is, how does the reverse mortgage product help FIs retain clients?
What was that, sorry?
Sure, how does the reverse mortgage product help financial institution retain clients?
Do you want to go first, Jackie?
I almost want to clarify, maybe Sue, you can help me. When you say retain clients, maybe you can just clarify what you think that means.
Yeah, so I'm wondering, the alternative scenario is that person perhaps needs to sell their home because they are cash strapped, house rich and cash poor. So retaining it and having a reverse mortgage, have you seen or do you feel that clients, that's a benefit to you? They will stay longer with them, perhaps when settling the estate, the family money stays, where you retain that client or family clients for a longer period of time?
Yeah, I mean, maybe I'll take another spin, and I don't know if I'm going to answer this appropriately, but one way I'm thinking about it is like if a financial institution like a credit union or a bank is trying to help their clients with their financial position, a referral to a reverse mortgage product could help because it allows them to improve the overall financial position of the customer. It allows them to pay off their existing mortgage potentially. Like one of those myths about reverse mortgages is that you need to have a home that's free and clear in order to qualify, but actually you can have a traditional mortgage when you qualify, and many of our clients use the proceeds of the reverse mortgage to pay off their existing debts, including traditional mortgages. That will support their overall cash flow position because you've now eliminated the need to have monthly financial payments, basically. And so that improves their cash flow for the bank. I think it just overall improves the profile of the customer's financial position.
Right.
I could answer this question from a retained customer perspective.
Mm-hmm.
We have a lot of longevity in our customers, not just because we can say that we have some customers on our books that are over 100 years old, which I think is awesome. But over and above that, if a customer ever needs a situation where they decide that they want to re-access more equity that they've accumulated while they've held a reverse mortgage,
Sure.
we give them the opportunity to do a refinance of their reverse mortgage to access more equity. And the purpose of those funds could be to fund their children or grandchildren's education, to help them purchase a home. We're just seeing the uses of the funds be endless in terms of why people access their equity.
Well, that's a really good point when we say too, it can start at age 55 and then, you have some wonderful clients past that age of 100. The needs during that time frame could dramatically change, different life milestones, different choices again that you may want to allocate equity from your home. So yeah, that's a great point. Okay, so we have a little bit more specific question. I'm not sure if this one is specific for a reverse mortgage or home equity line of credits. The question is, would this be available to a young adult that is severely disabled with a 10-year life expectancy who inherits a home? So again, with this, and I'm not sure if it's the reverse mortgage or a home equity line of credit, be available to a young adult that is severely disabled with a 10-year life expectancy who inherits a home.
I mean, from a reverse mortgage lens, the minimum age on title needs to be 55 years and above. So if the individual is under that age bracket, for us, they wouldn't be eligible for the product.
Okay. Would that be the same, Clive, for home equity? The minimum
Absolutely.
age is 55?
We have some really great stories that we share company-wide of customers that we've helped because of their situation, and we would not change our borrowing criteria simply because someone may be not fully able-bodied. So I would say that from our perspective, Jackie's spot on. As long as they meet our lending criteria, we're good to go.
Okay. And in this case, Wayne, just wondering for the home equity line of credit, how that applies as well too. So again,
Yeah,
it's
just
a young adult,
yeah, absolutely.
Inherited a home.
Yeah, again, it comes down to qualifying, but same thing. It would be, it really depends on the financial situation and the whether or not they would qualify or not for the home equity line of credit. It would be the same thing as if they were applying for a mortgage. So,
Okay.
so it's possible, absolutely.
Okay, great. Next question is, besides being over age 55, you know what? I think we covered this one. Question was, besides being over the age of 55, is there any other eligibility criteria for reverse mortgage? And I think we did cover that. So I'll hop on to the next one. How do rate increases and decreases for interest that gets added onto the total amount repayable for the reverse mortgage get handled? So I'll just restate that. How do rate increases or decreases for the interest that gets added onto the total amount repayable for the reverse mortgage get handled?
So with a reverse mortgage, you have optional interest payments. You're able to pay the interest, or you're able to allow that interest to capitalize. And so interest accrues if you opt to defer payments and to not make those monthly interest payments, then it would just capitalize as with increases and with decreases, basically.
Okay.
Right.
And Jackie, out of curiosity, can you manipulate that over time? Obviously, I think, you know, the reverse mortgage would have terms associated. So within the boundaries of terms, you could manipulate those variables as well too.
Exactly. So clients will opt into different rate terms. So it could be, they could choose a 5-year rate, and then after on reset, they could pick another term, basically.
Okay, great.
I think, Sue, in this question also, it opens up another avenue in the mechanics of a reverse mortgage in terms of the borrower understanding what the overall amount is that they're approved for versus how much they decide to actually take. So, you know, a consumer can take or be approved for 500,000 as an example, but decide today to only use 100,000 of that 500,000. The one piece that I would like the person who's asking the question to understand is that the additional money that the borrower takes is blended with the current money that they have. And so this is why it's so important to speak to a reverse mortgage representative specialist who can go into the details and really understand what your plans are for accessing additional funds. Sometimes it's more beneficial to take the full amount, sometimes some of it, and sometimes to take it in the form of an annuity. So just want to put out there to make certain that people understand that there's flexibility around how you also receive the money.
Yeah, that's a positive way to say it, because I was going to say, you know, what I'm hearing is it's not a rigid process. There are options within this. So yeah, work with a professional to understand what might be best suited for you. Great. Wayne, a question came in specifically for Neo. So the question is, for seniors who don't own homes, but have a term to 100 life policy, do you have lenders who would offer a home equity line of credit or reverse mortgage secured by their life policy?
So borrowing against the cash component of the insurance policy, I assume that's what they're asking. So no, we don't, not currently. Again, you know, I know that's something that, you know, in my past dealing with a lot of financial advisors, people borrowing against their, if they're not a homeowner, obviously, and they have an insurance policy that they want to access some of the cash component of that. There are lenders out there that do that. Unfortunately, that's not us, at least not today. So
can I just add that we are one of those lenders that does.
Okay, yeah. I was going to say, I'm
surrender
pretty sure
value.
EQ does.
So we offer whole life insurance lending. So I'm happy for anyone to follow up with me after about Equitable Bank lends in that space.
Great, great. There's a couple more questions, but I promise to the audiences we'll share them with Clive, Wayne, and Jackie, and we'll get some answers back to you if at all possible, because I'm sensitive to our time. And just before we wrap up here, first of all, again, thank you to the audience for those great questions. And thank you to Clive, Wayne, and Jackie for this great discussion. As I suspected, I have learned quite a bit and have some really valuable takeaways, as I'm sure many of the listeners and audience members do as well. But to kind of wrap this up, I was wondering if there is one key takeaway from kind of the topics and where the conversation has gone today, or about HELOCs, reverse mortgages, retirement planning in general, that you would like to leave with the audience today. Clive, did you want to go first for that?
Yeah, what I would like to say to everyone and say to the whole group, thank you, first of all, for having us here. I think it's a great session, a great conversation and discussion. The key takeaways that I would want to leave with everyone is what I started off with, is the concept of permission, and having people feel that, you know, they've earned the right to use the equity in their home. Canadians have worked extremely hard to build it up. And whether you're in the demographic of those who are 55 years and better, or in the age bracket of 30s or 40s, I think the view of how you see your equity should change. And it should become a part of your financial plan. So whether you're working with your banker, your wealth advisor, I think it's really important time for you to start to say, how does my equity fit into the whole picture of my retirement? And does it play a role in funding retirement? And I think that these are great questions to start the conversation going. Outside of that, the other piece that I would say is, don't feel shy about getting educated along the way. Sometimes we want to shy away from things that we don't know, but I think that anyone in this space is more than happy to spend the time with you to explain to you the mechanics, the framework, how the product works, how it can serve you, and the purposes that it can be used for.
Great, thank you, Clive. Wayne, how about yourself?
Yeah, no, Clive, you said that really well. I think that's one of the things is the education component for me. You know, so many people are so quick to say, no, I would never have or want a reverse mortgage, and really not truly understanding and being educated on how that product actually works. And so I think it's important that as we continue, this is a product that will continue to be a big part of the financial plans for many Canadians, whether it's a need or a want. But being educated on this product, I think, is extremely important. At least that's the first step. Yeah, that's all I have to say on that as a takeaway.
Great, thank you, Wayne. And Jackie?
I would say that I don't want to just echo what Clive and Wayne said, but I would just reinforce that I think that there is a real need for this product. There is a real gap. And I believe that Canadians can really benefit from the product, but it's going to take a lot of investment of education. So just going back to what Wayne's saying, like I think that a lot of those myths out there are a bit debilitating to the market, and it's our job to re-educate Canadians so that they really understand what they are getting into, and to dispel some of those misperceptions.
Great. I equally feel passionate about, you know, what, having the audience members and Canadians, let's ask these questions. Let's, you know, we have permission now, right? We have permission, we want choice. So let's go ahead and ask those questions. So I look forward to future discussions on this topic. Dean, I think we need to pass it back to you, right on time.
Yeah, I just wanted to extend my gratitude to all of the amazing panelists today for their incredible insights, and to Sue for moderating such a productive session. And thank you to everyone who tuned in to ask their questions. We encourage you to become members of the association and participate in the fintech, lending, and financial services community. And to continue attending our upcoming events, be they webinars or in person, you can visit financeevents.ca. We'll be emailing out the recording of today's session so you can watch it again on your own time. Thank you again to Portfolio Plus and all of our panelists, and we look forward to seeing you again soon.
Thank you, Dean.
Yeah.
Thank you.
Thanks, everyone.
Bye, Jackie.
Thank you, everybody.
Bye.
Everyone.